for my MFB. It's something that I could just call, not just call friends, get someone to help me source for people who have the experience, who are strong, people that will come and bring in their wealth of experience to bear on my day-to-day operations, and can also help me with other business running. That would go a long way in improving on our financial performance. Because what happens now is that even when we make money, sometimes we share it as dividends instead of reinvesting it. So all of that, if you look at my solutions, which since the slides are available and I will advise that they are shared to everyone, you'll find the things that I think we can do to improve on that. So moving forward, we'll look at, can we please go to the next slide, please? So I'm talking about DBN role in promoting access to finance for MSMEs right now, especially around the microfinance sector. We all know that DBN has 3 mandates. The first one is lending. And based on that, we've currently onboarded about, right now we have over 34 PFIs that we have onboarded. As at the end of last year, we had disbursed about 1.3 billion in loans to over 100,000 MSMEs. Our loans are usually long-term in nature, and we can also provide up to 18 months moratorium. What we've also done to encourage MFBs is that we have decided to allow them use the alternative collateral, such as the Nigerian Collateral Registry, to support their lending. Because we believe that every microfinance bank can have access or can invest in movable collateral, even their receivables, their loan receivables and customer assets that they have, they can put that on the NCRs, and that will add as a collateral for their lending and their borrowing from us. We've also set up a partial credit guarantee company that we call Impact Credit Guarantee, that is based out of Lagos, to help in sharing the risk that the MSMEs bring to you. And they are also in the business right now. We are encouraging all of you to also get in touch with them and see how you can share your risks that you're bearing. Another thing we are doing today, we are providing technical assistance. We've done some training and some capacity building for microfinance bank operators, both management level and at staff level, and we are still going to do that. We are looking at having a program, a technical assistance program, that would look at the capacity of our PFIs in the microfinance bank space to assess the risk that the MSMEs bring to them. If you look at my next slide, I'll throw more light as to what we've done in this case. So if you look at what we've done in terms of lending, our loans are, like I said, we use a minimum of your shareholders' funds. That's why it's very important that your financial performance is improved. Because if you don't have a good shareholders' fund, you might not be able to access a reasonable amount of money that will help you. And of course, we talk about longer tenure. We've also developed some products that will also help you to scale the kind of the size of MSMEs that you have, the number of MSMEs you have. We've also started a non-interest banking product. We just got approval. So we recognize the fact that there are some MFB customers that don't want to pay interest. They want to do non-interest banking product. We currently have commercial banks that are running non-interest banking product. But I know the CBN did not say that microfinance banks shouldn't run that. So this is an opportunity for MFBs to develop new products that enable them to improve their product offerings totally. Earlier on, I mentioned our technical assistance to microfinance institutions. And what we are doing is that we are thinking of providing expert support. This program will run for a minimum of 6 months, and we'll be looking at the PFIs that are currently in relationship with us. And the support will be in the areas of staff training, enhancing your IT, product development, like I said before, even environmental and social risk management and all of that, your loan process, your business continuity plan, all of that and many more. But unfortunately, the challenge we have right now is that our product offerings are currently limited to regulated microfinance institutions, which is based on the policy regulation setting up development financial institutions. The definition of PFI is there, and it means that you must be licensed and regulated by the Central Bank of Nigeria. But we are engaging with the Central Bank of Nigeria to see if we can include more microfinance institutions, the ones that are not regulated. We are talking about the financial NGOs, the cooperatives and all of that, if we can deal with them. Although we can't deal with them currently, we've also develop a product that we call finance to finance product, where we encourage this sort of customers, this sort of MFIs, to then go through their commercial bank to come and access TBN financing for their on-lending activities to the MSMEs. I think I'll stop at this stage. I hope I didn't do more than 10 minutes, and then we can continue the interaction with questions and answers. Thank you very much.
Well, thank you very, very much. Thank you, Mr. Bonaventure. So I think we can now go to the questions. And what I would like to do is to start with Mr. Olatidoye, since he has not spoken so far. So I'll start. The first question is going to be for him. And if Bonaventure has something to add, he can add. So my first question is that based on the experience of FBN Quest in raising funding for microfinance banks, in raising capital for microfinance banks using the capital markets, what do you think are the critical success factors? I remember I once had approached FBN Quest also in the past. That was some 3 years ago. So what do you think are the critical success factors in raising funding for MFBs through the capital market? Thank you.
Okay, thank you very much, Mr. Adegoke. And thank you to Mr. Jordan and the Accion Microfinance Bank team for inviting me for this wonderful occasion. Thank you so much. It's an opportunity. Based on our experience, what are the critical factors that we think are responsible or necessary to have a successful showing in the capital market? And they are, by in no particular order, investment grade rating. Quite a number of MFIs do not understand that there is a critical need to have an investment grade rating. We've met with a few of them that would say that I don't think I'm going to get an investment grade rating, but the truth is, why don't you start? If you do not have an investment grade rating, at least you know where to work on. Brand and market awareness of the issuer. When we started talking to quite a number of MFIs, we had to let them know that you're doing wonderful things within your various organizations, but people don't know about them. And when we mean people don't know about them, it's the investors, the capital market investment community, which represents pension funds administrators, asset managers, banks, HNIs, and corporate investors. Those are the people that they need to engage periodically, and then they need to have a very simple transaction for a first time, nothing very complex. A simple vanilla transaction that will be good. They need to have an improved investor engagement, just like I mentioned earlier. It's difficult when we are approaching investors when there is a transaction, but there has to be a conscious effort to engage investors even when there are no transactions. And then market timing. Market timing is very, very critical. The last 18 months have been a fantastic period to go to the market. And we've seen the only microfinance bank that went into the market. It was a fantastic showing. And we believe that, quite a number of other microfinance banks can come into the market at the moment as well. Scanning the market for competitive issuance, because essentially that determines, how you're going to price and what is the available liquidity for your product. Some other things that could also be considered would be the market liquidity at any point in time. The market liquidity has been very, very good so far this year. Within the last 24 hours, liquidity has been over 200 billion naira. Those are the opportunities that presents itself for microfinance institutions to actually tap into the market. And of course, favorable conditions. I mentioned earlier that it is the best possible time. In the capital market in the last 1 year, a total of about 600 billion has been raised in the capital market. Over 600 billion, in the last 1 year. And unfortunately, microfinance institutions only represent just 1% of that. There has to be significant improvement, on the ability of microfinance institutions to tap into this market.
Thank you very much. I think if I will just remind participants some of the things you have just mentioned. Success factors, investment grade rating is very important, and I think it's what we have tried to. Branding and marketing. You will observe that when you go to look for money, put a commercial bank and a microfinance bank, even if the size of the microfinance bank is as big as a commercial bank, there's a tendency for people to want to grab that of the commercial bank because of the kind of branding they have done. And I read that in the first quarter of this year, the tier 1 commercial banks, they spent 18-point-something billion naira on advertisements. So it's a pointer to us that when you are preparing yourself for the market, you have to start positioning yourself in the minds of the people that matter. Thank you very much for that point. And price scanning, competitive price scanning is also very important. And the liquidity at the market is also very important. I think the market is a little bit prepared for us now, unlike what we have 2 years before now. Yeah. Because treasury bill is no longer attractive, and the commercial banks are not paying very high rates. So people can think, okay, let me look at this microfinance bank. It now depends on how you present yourself and how you defend your position. Thank you very much. I don't know whether Mr. Bonaventure wants to add something on that point.
Yeah, I'm okay, but I just wanted to contribute to what you just said in terms of branding and positioning. The competition between, when you want to position your brand, between a commercial bank and a microfinance bank is actually not at the same level. So a microfinance bank that will want to go and compete with brand positioning at the same level as a commercial bank is actually digging a grave, God forbid, for him or herself, right? So I think the suggestion to microfinance bank is for them to discover or to find innovative ways. They have to develop technology on how digital technology, on how they can position themselves in the minds of the customers. This is an opportunity, like you said. The new normal has taught us many things, ways of doing many things. People don't stand up to go. I can't remember the last time, even before now, when I stood up and said, I'm going to my bank. So it's an opportunity for the MFBs to now compete significantly with commercial banks by making use of lots of digital technologies that some are cheaper than using the physical brand positioning and all of that. But the problem is many of them still don't see the necessity, or when they want to do it, they want to compete at that level, which is not encouraging for them. That's just a little thing I need to add. Thank you.
Okay, thank you very much. Please, I want participants to note that you don't need to go and spend 18 billion to advertise. Absolutely. For you to position yourself. Absolutely. You must find creative ways to be able to position yourself within your means and at your level. Thank you for that. Thank you for that correction. I will still go back to Mr. Olatidoye. Yeah. What do you think the capital market investors will be looking for in investing in an MFB? Now, let me put it this way. We discovered that at a point, you have people come from outside the country and they look at certain things, they see it, and they can put money down for microfinance banks. In Nigeria, locally, either our banks or our PFAs and so on, so they don't want to touch the MFIs. So what do you think are the factors that when an investor, a capital market person wants to look at MFB now, what do you think they will be looking for? Thank you.
Okay, thank you very much. Okay, let me start by saying that branding in the capital markets, does not really have to be very expensive. I just wanted to add that to what Mr. Bonaventure said, which is, excellent point. In the capital market, one of the things we do is to tell most of, MFIs and other clients is you need to position yourself in front of the capital market investors. And what we've done over time is to encourage them to go on roadshows, talk to them, even when you are not even raising money. When we did one of the most successful microfinance bank deals earlier in the year, as in one of the things that we realized was that most of the investors that we spoke with didn't have no idea about, how successful their business operation is. So everybody surprisingly, think that they are, accidents waiting to happen, institutions waiting to, to go under or to go bankrupt, and then most of the time when we presented to them, it actually opens their eyes. And then, the kind of questions they ask indicates that, there is a very deep, knowledge gap within their space, because they feel that it's a very small space that they cannot be putting money into that. So one of the things that we're encouraging is, even if MFIs, can periodically go on roadshows, talk to them, bring them in, let them understand how this business operates, let them understand the industry, it helps a lot. Now, going to the questions, what are the things that the capital market investors will look for? Capital market investors would always look for a scalable business. Is your business growing? Can we put money in this business and be sure that this business that is worth so naira will be worth, this naira plus X tomorrow? That is one of the things that they're looking at. Number two, they are looking at the return on capital. If this business is really growing, is it making money? They're also looking at, the ability to repay your debt. Because, as much as they're interested in, the ability of the business to grow in perpetuity or to grow into the future, the manageable future or the foreseeable future, they are also interested in seeing the ability of the company to repay its debt, and then to, provide some form of returns as well to, providers of capital, the equity investors. So those are the things that they're looking at. Number one, they're looking at if the business can grow, if it's a business that would exist into a foreseeable future. Number two, they're looking at the ability of the business to repay, to service interest and also repay the principal that has been invested. Number three, they are looking at track record. They're looking at, the existing ability of the business to service its debt and then, manage the business going forward.
Thank you very much. And if I may summarize what you have mentioned, they are looking at businesses that are scalable. And I have personally observed that even as an industry, part of the problem confronting us now is that we have not scaled. I think we're in a particular committee, Mr. Joda also was part of that committee, where we put all the resources, all the total businesses that all the microfinance banks in Nigeria are doing. We have about 900 of us, and we put it and we have to benchmark it against only one commercial bank. So it means that scaling is not only good for individual business, it's also good for us as an industry. And it's part of the reasons why we are doing this thing. It's a problem we must solve. The industry has to scale to be able to attract the right resources, both human, material, and financial. So scaling is very, very important. And return on capital is also very important. There are a number of MFBs that have been there for years. They have not made profit. And for whatever reason, people can give excuse, they can justify. But when you want to go out, nobody wants to listen to the reason why you can't make money, because they are putting their money where they are going to get the best return. And the ability to repay the money also is very important, which is about your cash flow. And now, if I must add, it takes me back to what Mr. Bonaventure said, some of the things like corporate governance, they want to be sure, because that is how they will be sure that ultimately you'll be able to make money, be able to pay them, you won't divert the money, and you will scale at the end of the day. They want to also look at the capacity of the people they are committing the money to. So if we don't develop our capacity in such a way that people who want to give money can trust us, that we have the capacity to turn this money around and be able to repay them, there's going to be an issue. And I think risk management is also becoming very, 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 very critical now. They want to be sure that you have a process that their money will not get lost and things like that. So thank you very much. I don't know whether Mr. Bonaventure wants to add something on that.
Sorry, I was muted. Just briefly, you mentioned the point I wanted to add already, corporate governance. I just want to illustrate it. Let's say I'm an investor and I want to invest in an MFB, and one comes to me and I want to be introduced to the board, and I see the husband, the wife, the two children, the younger sister, the senior sister, the board member. Or I see another one that has totally unrelated parties and board members. Even without calling for financial performance and any other thing, I think I'll be more encouraged to the second one than to the first. So we keep forgetting that people believe that because in Africa, we find it very difficult to trust. So since we don't want to trust people, we find it very difficult to go into business association with them. Because there are so many examples of how, oh, we trusted that man and he stole my money and ran away. Okay. And then again, in Africa, we believe in powerful men. We believe in powerful people. It is agreed, powerful men, powerful people are needed to maybe set up and establish something and make it start. But what makes that industry, what makes that enterprises to run, to live forever, are the quality of the systems, processes, and structures that are put in place. So if I'm seeing an institution that have all of that in place, I'll be encouraged to provide funds. So my advice today is that if you are an MFB that want to go raise money, ensure that you look at all of this before you even come out, or else you will just be playing a losing game. Thank you.
Thank you very much. Thank you. Now, my two next questions are directed to you because you are dealing with debt funding. So the first one is, what are the factors to be considered in pricing debt? Okay, I think I will still come back to Mr. Olatidoye because it's not only debt funding, debt security too. But what are the factors to be considered in pricing debt securities?
Okay, so let me use from my own viewpoint, right? So how do we price the PFIs that come to us? First of all, we look at the risk that you are bringing. So if we do your eligibility criteria, we do our due diligence, and we discover that your risk is low, your pricing would reflect that. Because we are a sustainable organization, we run a sustainable operations. And what do I mean by that? I mean by the fact that we need, since our source of funding is also debt, we don't rely on government grants or budgetary allocation. We have to run an operations that is sustainable in the fact that whatever we do, we have enough money left over to continue to be in business. If I give you a 10-year loan, I want to be alive in 10 years to collect my interest and principal back. I don't want to die before you pay me. So that's why we have to charge some interest that will match what we are doing, match the risk that you are bringing to us. We also look at what is happening in the market. The market forces, liquidity, pricing, and all of that in the market will also determine the amount of interest that will be given to you. Thank you.
Okay, thank you very much. Now, I will ask the next question, then I will come back to Mr. Olatidoye so that you can now react to the two questions together. So please take note of that one. My next question is that what factors do debt funders consider most important when deciding to avail debt facility? We have said a lot around that, but in case you still want to add something.
Okay, so it's very clear. Before I give you any loan, I need to ask myself, would you be able to pay me back? So that's very, very important. You know, this is even an elementary question. Like all of us, when we're starting banking, they told us 5 C's of credit. The most important C is character, okay? And that's why if you look at character, character is seen in corporate governance and your historical performance. So basically all of them, your capacity in the past to repay loans and all of that will determine your future capacity to also pay me back. So those two things are very important to us.
Okay, thank you. So it's like what we also look for when we want to lend money to people. When people want to lend money to us, they will look for the same thing. Look at our character, at our capacity, as to where we have collateral, and I think DBN has done fantastically well in trying to address the issue of collateral and bringing something that people never thought could be, could qualify as collateral, and that has worked a lot. Now, there's a question I will mention, but you won't answer it now. It's when I come back to you. Now, you see, there is this issue of trying to de-risk the MFBs. Because even among ourselves, the risk perception is still not good. Before you talk of outsiders, a particular guy who has worked with me in the past sent me a message that he wants to place money. He's working in a microfinance bank. He's a CFO of a microfinance bank. He said he wants to place money with me. And I said, no problem, bring the money. He said, but I must pledge something. I said, like what? He said, I must pledge TB. And I laughed. And I called the guy and say, why must I pledge TB? You are a microfinance bank. You cannot carry your money and go and lend. You want me to collect that money, give you interest, then pledge TB. I don't do like that. I said, you should carry your money and go. But the point is that even a microfinance bank wants to give another microfinance bank money and is asking me for TB. So that tells you the kind of perception that we still have out there. So the two panelists will help us on how can we de-risk. So, but let me go back to the last two questions for Mr. Olatidoye to add his voice to the issue of pricing of debt security and what debt funders look for. Thank you.
Okay, thank you very much. I think Mr. Bonaventure had covered everything. I would only had just a few. From the capital markets, we consider a credit rating. And credit rating essentially demonstrates the ability of the issuer to, repay an obligation. And essentially what they do is to look at the qualitative and the quantitative factors. And the quantitative factors are around, performance, liquidity, profitability, and then the qualitative is around management, corporate governance, and the rest of them. So that helps a lot. One other factor is also the benchmark. The benchmark is always the FGN bonds, the similar tenured FGN bonds in our market. Surprisingly, or at the moment, the benchmark rate has been single digits, so which is a perfect opportunity for anybody to come into the market. Another factor to be considered is the rate or the yield on competing instruments, bank placements, other corporate bonds as well. Because what that does is to place a benchmark already, on an instrument. So most of the time what we do is to look at the instrument that is about to be launched about that time, even before we go into the market. Then we need to consider the market liquidity, and then we need to consider the level of interest rates. So when we consider the level of interest rates, we need to understand if this entity can successfully service the interest and principal over the tenure of the transaction. And if not, then we need to consider something a lot more realistic. So that those are the things that we'll consider in terms of pricing debt securities. In terms of what are the factors that markets will look at, the capital market is good, is robust. However, very tedious. It's very, if there is no proper corporate governance in place, there is no transaction. It's a non-starter, for the capital market. So when we approach a company and then they tell us that they want to, access the capital market, the first few things the first 2-3 questions we'll ask them would include, let's have your corporate governance, let's have the structure of the business, let's have the organogram, let's have the composition of the board, because essentially the capital markets will not even touch any business that does not present a proper sound corporate governance structure. And that is the same as the capital market, as the same with the with the bank market as well. It's the beginning of the conversation. And then most of the things we do is we don't just turn them back. We tell them that, okay, we will do some housekeeping. And our housekeeping involves taking that business and putting that business on a right scale. To say, we will need to have, a recognized auditors. We would need to restructure your corporate governance. You need to come up with, better and much more efficient policies around the business, which could take a bit of time. It could take as much as a year, but at least we know that those are the paths towards getting, towards accessing the market.
Thank you very much. Thank you very much. Now, let me, because of time, I've still not forgotten the issue of de-risking. We'll get to it at a point. But my next question is on the steps MFIs need to take to be able to overcome liquidity challenge in the midst of a pandemic. Now, let me say that because our stock in trade is actually money, is cash. So the issue of liquidity challenge, I think, even without pandemic, is also a regular thing. It's what we should be equipped to deal with from time to time. And we also need to correct the perception that when there is a liquidity challenge, it's a sign that the bank is in distress. No, because of what we are dealing with, I think it's something that should be part and parcel of our business life. So, but with the peculiarity of this time, what do we need to do as MFIs to be able to deal or overcome liquidity challenge in this pandemic period? So let me go back to Mr. Bonaventure, then I'll come back to you.
Okay, thank you very much. This is actually a very difficult question to answer. Because the fact that there is excess liquidity in the environment right now in the financial space provides an opportunity for microfinance institutions. But the challenge that most microfinance institutions now face is the perception about the nature of the risk that they bring or they provide for the person who's going to deposit funds. there's that impression. In fact, it's not just the truth of it, that even the regulatory agency has also contributed to this in some ways. We have banks that are called too big to fail. So even when you look at the commercial banking space, the banks have been tiered. So if I'm a depositor, when I want to deposit money, the first institutions I want to go to are the too big to fail banks, because I believe that they can never fail me, right? So I want to go put my money there. So it is only when I'm not, and the truth of it, that some institutional depositors, let me put it that way, are even willing to forego better interest rate just because they are looking at the risk involved in going down market to put money in the microfinance bank, for instance. So it then comes back to the microfinance bank. They need to put themselves in a position where that risk, because it's an issue of perceived risk. It's the risk that the depositor have assessed. So we have all assessed them and says, I'd rather put money in this bank and not put money in that bank. Why? It's because of the nature of your operations. So that's why it comes back to everything we've been talking about today. Issues around corporate governance, issues around your structure, your processes, even your branding and positioning. You need to make sure that people recognize you as that bank where things are done right. And then once they recognize you as that, the perception that you are a high risk institution is taken away, and then the willingness to provide you with deposits and liquidity comes into play. So it's every institution needs to look at themselves. They need to look inwards, and then they need to revamp their entire processes. This is the period, because like they say, the taste of the eating, right, is in the pudding, something like that. So this is the opportunity, because people that never would have come to, for instance, Adegoke, your friend in the other microfinance bank that wanted to give you funds, ordinarily, I'm sure he would have wanted to go to First Bank or FBN Quest. You get, but because of the fact that he knows that when he goes to FBN Quest, they are going to give him 1% or something, he has decided to come to you. So, but even when he coming to you, he has assessed your risk by himself and says, no, this guy must give me treasury bills. So it's for you. For me, I would have told him, if I were you, come and look at my records, look at my financials, look at my everything. Just do an assessment. Don't sit in your office and assume that I'm a high-risk person. By the time they do their assessment, they can then come back and say, yes, Adegoke and Co., e.g., has a low risk because of 1, 2, 3, 4, which we all know. So I think that's the best way. So first of all, work at your systems and then position yourself and bring yourself out and let people realize that you have now improved. So the assumption or the perception of a high-risk environment is no longer what you are bringing into the market. Thank you.
Thank you. I think you have taken 2 questions, because you have talked on the issue of the risk also. That is very, very, very important. And I believe that when you try, you may not succeed in the first instance, but when you do the right thing and you do the right thing, over time you will get a result. I'm coming back to Mr. Olatidoye. What do you think MFI should do to overcome liquidity challenge at this crisis time? You have muted yourself.
Yeah, yes, thank you. Thank you very much. They are not particularly different from what Mr. Bonaventure has said. I just had a few things with that. And one of the things that we realize that it's very, very important is diversification in terms of funding or funding sources. It would be nice to inform everyone that a third of the bids for the microfinance bank transaction that was concluded earlier in the year was actually from an international fund. So there are people interested in investing in MFIs. However, you know, those things that Mr. Bonaventure had mentioned are quite critical, you know, and they must be effectively considered, you know. So diversified funding sources, which is very, very important. We think that, you know, you can access funding from DFIs as well. Although, you know, we would always encourage that it must be, you know, Naira denominated funds and not, you know, dollar funds or euro funds. We believe MFIs should increase their deposit drive. We completely understand the challenges around, you know, placements, you know, based on the conversation that you had with your friend, but we believe that, you know, consistently demonstrating to the market that you can, you know, you have improved processes, very strong corporate governance, you're profitable, you know, excellent management processes, that should endear the market, you know, to you, and then you can then use that to drive your deposit base. We also believe that you need to increase your credit risk management, you know, practices. Quite a number of feedback that we got on the roadshow so far around MFIs and MFBs are very, very much around the non-performing loans and the portfolio at risk. You know, as much as we try to explain those things, we also know that, you know, there has to be considerable demonstration on the part of the MFIs and the MFBs to show that they can, you know, improve their credit risk management processes, you know, and then bring down those portfolio at risk to a reasonable level that, you know, the capital market will find them quite interested in, you know, in investing in them.
Thank you very much. We're about taking questions from the audience. Let me say this last thing, Mr. Bonaventure. Is it possible for somebody to get a loan facility of up to 5 years in DBN?
It is possible. Straightforward answer.
All right. Thank you very much. I want to thank the panelists. I want to thank the Accion team for the opportunity. While I'm handing over back to Fisayo to take the question and answer from the audience. Thank you.
Thank you very much, Mr. Adegbami. Dear participants, please note the chat box has now been opened. So we'll take all your questions, feedback, and interactions, please. If you would like to speak, please raise your hand so that we can unmute you. Thank you very much. Okay, we have Abraham. So I would go ahead and unmute him to ask his question. Hello, good morning.
Okay, good morning, Fisayo.
Good morning, Mr. Abraham. How are you doing this morning?
Good.
Great.
Yeah, I want to first of all thank the organizers of this platform. I mean, it's exciting when you find people develop interest in what other people are doing, even though they are supposed to be competitors. The kind of leadership that Accion has displayed in the last couple of months is exemplary. So I want to say a big thank you to Accion, being led by my very good brother, Mr. Taiwo Joda. I also want to thank Goke for being part of it, but I just want to be specific with my question this morning to the DBN. As a microfinance bank, you have some SMEs that you have nurtured over the years. And at a particular point in time, they want to become too bigger than you, especially if you have not secured a higher license. If you are a unit microfinance bank, state microfinance bank, you now develop an SME that becomes very big and then begin to compete with, you are now competing with the commercial bank in terms of funding. Is there a limit to what the microfinance bank can do for that SME through DBN? For instance, you have an SME that requires maybe about 300, 500 million naira over a period of time. can they leverage on their relationship with the MFB to come to DBN for expansion and working capital funds?
Okay, thank you, Mr. Adolphus, for your question. So the limitation are imposed by yourself, okay? Because like I said earlier when I shared my slides, what will provide as funds for you is 45% of your shareholders' funds. This can actually be increased based on specific negotiation and looking at what you have. But unfortunately, I know that most unit microfinance bank might not have. In fact, many of them are still, sorry, excuse me, many of them are still trying to get to the 200 million threshold set by the CBN. So basically, that's what we look at to also try and see what we can then give to you. But to be very clear, there is no way you will not get to a situation where if your customer is doing very well and is forward-looking and progressive, it may even start getting transactions that are bigger than what you can provide. And I can even get some of the commercial banks are faced with that as well. And that's why we have issues around syndication of loans. You know, so I don't think Dangote, for instance, only one Nigerian bank can take all these transactions. So it's the more of those type of people that you build over time. I think that's what really make people see that you're a very strong institution that assist MSMEs or whosoever to grow into bigger and larger companies. Thank you.
Thank you very much, sir.
Okay, thank you very much. Saba, could you please mute so we can take another participant? Okay, so I would go to the chat box and read some of the questions out in no particular order. I have one from Bumi Lawson. Good afternoon, all. The National Association of Microfinance Banks has set up a microfinance development company to pool funds to fund the microfinance, excuse me, just a sec, please, okay. Okay, so I'll take that again. Good afternoon, all. The National Association of Microfinance Bank has set up microfinance development company to pool funds to fund the microfinance sector. Would the DBN be willing to provide long-term debt to MDC for on-lending to smaller MFBs that may not meet our criteria for lending in terms of size?
Yes, I think we are willing to look at that. I know the previous president had mentioned that to us before he left. That's Mr. Rogers. But it's something we need to sit down with Mrs. Lawson. So I think it's a conversation we need to take out of here, because we also have to look at the structure and the governance at the association. We need to know what it is properly. Record that right now, like I said earlier, our definition of a PFI is restricted to what the Central Bank of Nigeria has restricted it to. Thank you.
Thank you, Mr. Bonaventure. This is for Mr. Olati Doye. In view of the fact that the bond rate is very volatile, how do you achieve a good benchmark without putting your institution at a disadvantage?
Okay, thank you very much for that question. When we say that the FGN is a benchmark, it's FGN at a particular point in time. So when we are pricing a deal, we price a deal on a particular day. Take, for example, today, and then we use the benchmark today. What that means is that you have a fixed rate to pay throughout the tenure of that transaction. So you don't have any volatility, you don't have any fluctuations. Yeah, and I can put a number to that. The FGN 5-year today is sub 8. So let's take 8. And if you're going to put a premium to that for risk, liquidity, credit premium, settlement risk, and the rest of that, let's assume that is extra 2%. So that means we are pricing the transaction at 10% today. And what that means is that over the next 5 years, you are going to pay 10% on that transaction. So you will not have any fluctuations. During that period, the benchmark instrument could go as high as 17%, it doesn't affect that transaction. Could go as low as 8%, it doesn't affect your transaction. So we take a price on a particular day, and then throughout the tenure of the transaction, that is the rate applicable to that instrument.
Thank you. The next question is from Tululokbo Bayinka. One of the key success factors mentioned is to have an investment grade rating. To have an investment, oh, sorry, excuse me, I think this was, okay, one of the key success factors mentioned is to have an investment grade rating. Do we have local rating agencies with good local knowledge that can provide these ratings?
Yes.
Who should I adjust that question to?
Okay, I just jumped on that question because he has to do with the capital market.
Yes.
Yeah.
Yes, go ahead, please.
Thanks. For the local market, we actually have a number of rating agencies. I think there are about 3 of them that are well recognized. There are others that are also registered by the SEC, but there are 3 well recognized rating agencies in the local market that have very rich knowledge of the local market and that can provide a rating. In fact, when we're talking about credit rating, we are not talking about the ratings that are provided by the international entities, because that is, a bit expensive for MFIs. But we're looking at, rating agencies locally that have developed experience and performance over several years within the local market, and we have them.
Great, thank you. This is from Chima Nwokoji. Looking at the liquidity challenges facing the MFB sector, do you think that up to 50% of MFBs will scale through the 200 million capitalization threshold set by the CBN going forward? That's from Chima.
I can try to answer this. For me,
go ahead.
As a person, I believe that if the threshold is 50%, I believe that more than 50% of MFBs will skate through. Why? Because the CBN has also extended the time for them to do that. The only MFBs that will not skate through, because if you look at what we've all been saying today, people need to be properly structured. You need to set yourself up very well. The MFBs that don't set themselves up very well are obviously the ones that will not make it. So, and then there must be a willingness to allow other investors to come into your business. You don't have to decide to go, you don't have to go it alone, but we need to allow other people to also come in. As much as we know that it's difficult getting quality people. But I used to have a boss that would tell me that Naira actually does not have any color. Although we try to make sure that today, be careful of where it's coming from. But please let others be able to come into your business and bring in, no matter what they bring in, even if it's a little drop of water that we say make a mighty ocean. So I think that's the kind of thing we need to open our minds to. And we can get more than 50% missing it. Thank you.
Thank you, Mr. Bonaventure. This question is for you. It's from Ogu. Greetings. My question is to Bonaventure. So my question is to, sorry, I'm just trying to find, I think this thing moved again. Just a second, please. Okay. Greetings. My question is to Bonaventure. While the NGO MFI is excluded from funding, I think the question is, why is the NGO MFI excluded from funding? Because the person wrote wow, so I think the question should be a why. Whereas this NGO's MFIs access international funding after successful rating and due diligence by international debt funders in governance, strong processes, scalability, profitability, and sustainability.
Okay, so that's the basis.
Should I take that again?
No, I understand the question. I think what he's saying is that I've excluded NGOs, MFIs from my list of participating financial institutions. because I said that I only deal with regulated and licensed by the central bank, okay? So it's clear, I understand that, and this argument is also the basis of the engagement we are having with the regulator. So like I said earlier, we are looking at a situation where we are able to then onboard the good ones. So if our discussions are concluded on a positive note, we'll definitely have them being able to access our financing as facilities as well.
Thank you.
I think that answers the question, right?
I hope so. If it needs clarification, Mr. Nwogu, please let us know. This question is for you as well, Mr. Bonaventure. What is the range of your pricing and tenor of your lending?
Okay, tenor is up to 10 years, like I said earlier. Pricing is based on the different PFIs, like I explained earlier, and also the level of risk that you bring to us as well. So I can't just tell you that the pricing to you is this.
Okay, thank you. Just a quick reminder to all the participants, if you would like to speak, please raise your hand so we can unmute you. It doesn't have to just be chat box messages as well. So there's a question from Citygate Global. How can corporate governance be standardized in a unit MFB that is owned managed without compromise, since corporate governance is key in assessing external funding? Do we take your response, Mr. Bonaventure? Should we go to Mr. Laditoye?
Okay, fine, I can respond as well. It's the Central Bank of Nigeria has a corporate governance regulation for different kinds of financial institutions. If the proprietor looks at it and decides to follow through what is stated there, I'm sure that that's a very great start for the unit MFB. So you can access that. I'm sure it's from the CBN website, or I'm sure some other people can give it to you directly. But if you don't have it, if you send me an email, I can find it and send to you as well. Thank you.
Thank you. Mr. Laditoye, do you want to share anything? So do you want to add to that? Can I go to the next question?
Yes, please. I think that answers it. We can go to the next question.
Okay, all right. Thank you. I think this is actually for you. Do you think it's possible for MFBs to meet up with the new capital requirements?
Yes, it is. You know, like Mr. Bonaventure earlier said, you don't need to run the business alone. You need to invite others to invest in your business. And if you have indeed managed a very good business, you should be able to get people to bring in equity to support your business, and including also getting some very good hands to also sit on your board as well. With quality experience over the years.
Hello?
Hello, did you get me?
Are you still there?
Yes, I have.
No, I didn't get the last part.
Okay, I said,
I think you froze for
you don't necessarily. Can you hear me?
Yes.
Can you hear me?
Loud and clear now.
Okay, good.
Yes.
I said you don't necessarily need to run a business alone. You don't necessarily need to meet up with the capital requirements alone. If you've managed an efficient business, a good business with good prospects, you should be able to get one or two investors that will be willing to put some money there, and probably sit on the board as well to provide some guidance, based on their experience. Yeah, so I believe it's possible for MFBs to meet the new capital requirements.
Thank you very much. Those are the questions that we have. Okay. So Mr. Jordan wants to ask a question. So go ahead, please.
Thank you very much. I have a question for Mr. Okaimo. You had, during your slide presentation, you said you were doing some things in the area of capacity building. And you showed a slide that showed where you're working with some clients in trying to build corporate governance and a few other things, which is quite commendable. But you also mentioned that you're only dealing with customers or clients that you have pre-approved and are enjoying facilities from you. And I think what we need in the microfinance bank sector is actually someone of a DBN status that can actually enroll those who were in the 61% that couldn't get loan to and help them to become a success story, so that a lot more from this sector can actually have access to that loan. Because you have mentioned about scalability, and we need these loans, even if it's a 20 million, even if it's a 50 million, because we have faced serious challenge with unit microfinance banks. And I'm not sure if you have been able to successfully lend to any unit microfinance bank because onerous requirements at the level of the unit micro. So how can we build a stronger ecosystem? And is it possible for you to allow others, other players who are not currently enjoying facility from DBN to come into that net so that we can train them? Is it possible, for example, the National Association of Microfinance Bank to invite Development Bank of Nigeria to partner with capacity building for the industry? My second question to Mr. Olatidoye is there a minimum that you will consider for capital raising? You mentioned the microfinance bank raising 6.2 billion. So if I'm a unit microfinance bank, will it be what's your trouble? What is the minimum capital raise that you will consider is what your effort as FBN merchants, FBN Quest? Thank you.
Okay, if I may go first, Taiwo, I think it's a very, very great suggestion and recommendation from you. In fact, that's part of what we are thinking about. But you know, like they always say, charity begins at home, okay? So there's some sort of capacity building we do, even when you're unsuccessful. Because when we review your processes, when we review your books, and then we get back to you, we normally will tell you why you were unsuccessful. And we point out, we highlight the areas that you require improvement. And we say, okay, fine, we are willing to look at a 6 months period for you to then improve. At that period of 6 months, we are available, because this is like a medical doctor that you go to and he says, okay, you have malaria fever, take Panadol. Of course, the medical doctor expects you to go to the pharmacy and purchase the Panadol with your own funds and then come back and say, okay, I'm well, right? So unfortunately, that's the stage we are right now. But part of what we are doing is we want to start at home. We want to look at the people that we've started dealing with and say, okay, fine, let's look at these MFBs and say, okay, we still need that you need to improve in this area. And we are willing to spend our own funds based on the partnership we have with development partners like the World Bank. So that's what we are looking at currently. But your suggestion is highly appreciated, is noted, and we'll take it up further. So like I said, our doors are always open for discussions. Mrs. Lawson mentioned something earlier, and I said, okay, with something we can continue outside of here. We will look at how best we can pool resources and then come up with something that will be advantageous to the entire industry. Thank you.
Okay, if I can go now. Okay, good. The question was around the minimum size that we would consider. Yes, we have a minimum size of around 2.5 billion. The reason being that capital market processes are the same. For 2.5 billion to 100 billion is essentially the same. And we believe that below that level, it's not commercially viable for us, because of the detailed processes that you would go through. But beyond that, what we're trying to do as an institution is also to understand that there are limitations in terms of MFIs accessing the capital market. So one of the things that we're doing is to also get a way, or a vehicle that can be ramped through which MFIs can access the capital market. And what I'm saying is quite simple. So we have a vehicle, we will get a vehicle. That vehicle would have credit enhancements from DFIs or third-party credit enhancer, and then that vehicle goes to the market to raise money and then on lend to a couple of MFIs. Now, that is one of the things that we are considering, going forward, because we know that there are limitations in terms of size. So MFIs may not be able to take as much as 2 billion or 2.5 billion or even 5 billion. But we know that if we are able to aggregate their demand, we should be able to go into the market, raise a 20 billion naira, and then, on lend to, different MFIs like that, in such a way that they would only take, what they can consume, essentially. So that's one of the things that we are looking at, going forward in the industry, and that is one of our, our own ways of providing access to the capital market, so that we can increase the level of participation from the current 1% to, something a lot more better.
Thank you very much. We have Mr. Sunday Ali with his hand, so I'll just go ahead and unmute him very quickly. Hello, can you hear us?
Yes, I can hear you. Good afternoon.
Great.
Good afternoon.
Good afternoon.
Well done. My question is
Thank you.
to Mr. Bonaventure. If you can display his email and contact, because I want to make some inquiries in terms of the technical assistance on staff training. So if you can make his contact available to continue conversation after this meeting. Thank you.
Okay, so one of my colleagues have sent a chat to everyone because I've been getting private requests for email address and all of that. So she has provided an email, but alternatively, we can also send, because I know part of what was requested for is the corporate governance code and all of that. We can also forward it to the organizers to also circulate as part of the papers. Thank you.
Thank you very much.
Okay, thank you, Mr. Bonaventure. So I'll take the next question. If you'd also like to speak, please raise your hand so that we can unmute you, please. Okay, if you've sent your questions earlier but we've not taken them, could you please kindly resend the questions? We have a little bit of technical issues, so some of them are not dropped. If you could just resend them, please. Thank you very much. So from Mojisola Gaba, thank you, Mr. Aladun Joye. How soon can the process start? How soon can the process start, considering limitation of time to April 2021?
Okay. Hi. Mojisola Gaba.
Would you like me to take the question
really
again?
Don't understand. Yeah, I got the question. But I needed her to provide some clarification as to the limitation. The April 21 is at regards, what date? Is it a regulatory deadline or what? I really need to have that clarification.
Okay, Mrs. Gaba, would you like us to unmute you so maybe you could actually ask the question, if that would make it easier for Mr. Olatidoye to get clarity? And then also, just quickly, while we wait for that, I would like to also, I've seen Ms. Lawson's hand up, so I'm just going to go ahead and unmute her very quickly. Hello, Ms. Lawson, can you hear us?
Hello, yes, I can hear you. I couldn't unmute earlier. Thank you very much. Good afternoon, everyone. It's indeed a pleasure to be here. Well done to Accion for taking the flag higher to the team there. My question, which I'd actually put in the chat, was about the willingness, and this question goes to FBN Quest, Mr. Olatidoye. It's basically that in the past, and even continuing, I believe we will find that foreign funders are more willing to lend to the microfinance sector. You see that even from the list that Development Bank of Nigeria shared, you see that they are largely foreign funds. Why is it that Nigerian banks are not willing to fund, despite the fact that those same banks are now getting funding from foreign organizations? So, and in fact, the terms that you get from the foreign organizations typically are lower interest rates, lower demand for collateral. Some of them are usually unsecured, unsubordinated debts. So why are Nigerian commercial banks and funders not as supportive as these foreign funders? Thank you.
Okay, thank you very much, madam. I think, we mentioned some of these factors earlier, and I think it's still the same problem. You'll be shocked the number of banks or funders in the local market who do not have a very good knowledge of your business, or who do not have very good, who cannot assess your risk, right? And it's very, very, it's very, very easy. When we did the transaction earlier in the year, we noticed that it was easier getting an international fund to invest than to get a local bank to submit a bid. We couldn't even get a local bank to even agree to a roadshow. So most of the roadshows were PFAs, asset managers, and and some funds. And I think it's still the same problem. Quite a number of them do not understand your risk. Quite a number of them do not understand your business. And the microfinance banks themselves or microfinance institutions need to go out of their own comfort zone. You need to reach out to these guys to educate them. They need to understand. And by understanding, there is a funny assumption from our side, from where we sit, that this is how it is. But the truth is that having done a transaction, having worked with a number of microfinance banks, when we started, I had to educate myself and my team. We had to essentially educate ourselves, and that is the same problem out there. People don't understand, so you need them to understand. You need to sit in front of them to teach them, essentially. And branding is also very, very important. We mentioned earlier that we need to have roadshows. MFIs need to leave their comfort zone, go to these funders to talk to them. There is a funny conceptions in their minds that they have to change, and it can only be done by going to them, sitting with them and explaining to them.
Thank you, Mr. Latidoye. Okay, so I'll take this quickly. The answer, okay, so there's a response from Mr. Ogu. I think this was, it directed a question at Mr. Bonaventure and is not clear. So it says the answer provided to me by Bonaventure is not good for me. It should explain why, while there should be deliberations with regulators, CBN, a deliberation, in my opinion, is taking forever on including the NGO MFIs for funding, whereas the NGO MFIs is recognized in the CBN guidelines to operate microcredits only businesses to the poor. This is my opinion. This, in my opinion, equals all MFIs, MFIs, and MFBs, while in the fight to reduce the poverty rate at the bottom pyramid. Mr. Ogu, could you please raise your hand so we can unmute you? So maybe you could share your clarification. So we'll take another question. Okay, this is a comment from Mary Esther. Mary Esther is from DBN. Hello, everyone. For those sending in inquiries to DBN on revised code of corporate governance for MFBs, kindly send your emails directly to mezeadi@developmentdevbank.ng.com. Also, the slides and the recordings will be sent 24 hours after the session. Thank you very much. Mr. Ogu, have you raised your hand? Ms. Lawson, I see your hand up. Would you still like to ask a question? Okay, I guess not.
No, not at all. It was from before. But thank you to Mr. Ola with FBM Quest. Sorry, I'm missing off your name. But thank you for that very good response. Thank you for the response. Thank you.
Thank you.
All right, thank you. So I'd go ahead and unmute Kenneth. Kenneth.
Hello.
Can you? Yes, go ahead, please.
Yes. Good afternoon, everyone. I want to appreciate Accion for taking the lead, and also the host from DBN on FBN Quest. My question is directed to Olatidoye. I heard him mention investment ranking, that MFB should try and get investment rankings. But what was in my mind was if that is the same thing as credit rating. I don't think, but I just want clarification because I observed that credit ratings in Nigeria are very expensive for MFBs. So if it's the same, is there any way we can get this rating subsidized? But if it's not the same as I imagined, I would like to understand more what investment ranking means. Thank you.
Okay, thank you very much, Mr. Kenneth. What I meant was investment rating, not ranking. And it's the same thing as credit rating. You know, it's just a different name. Investment rating, credit rating is the same thing. But one of the things that we also need to mention, on this forum is the fact that there are a number of international funds that sponsors credit ratings for MFIs and MFBs. And, you know, if you can access them, that will be fine. But the truth is that there are available funds that can pay for a credit rating for you. Now, I don't know what the requirements are or what the conditions are, but there are, a number of funds, international funds, that can actually sponsor a credit rating for an MFI. So I think the most important thing is you need to access them and then, make a request for that. That's number one. Number two, we've spoken with the credit rating agencies locally, and we've agreed with them that they would have to offer some form of discount to MFIs. And to that extent, we've worked with a number of them. I think we've done about 2, 3, 4 in the last 2 years. and they were offered at a discount to their normal rate. Now, of course, that is still a lot of money, but what we encourage MFIs to consider is the fact that this is an investment. If you look at the cost alone, you are not going to do anything. But think about it as an investment towards accessing a different market entirely. And this market is much more liquid, is much more flexible, is much more. It has a lot of depth and volume, and this is what you're investing in.
Great, thank you. So just take a quick second, about 5 seconds, to get reaction from Mr. Ogu. So the tech team will just go ahead and unmute him.
Sayo. Hello.
Yes, please.
I think if I may say this, on the issue of investment rating, I think the question was actually referring to you mentioning investment grade rating. I'm talking to Mr. Olatidoye.
Okay.
You mentioned investment grade rating because those grades, there are different grades, and there's a minimum you must have.
Okay. Thank you very much, Mr. Adegoke. Investment grade rating means that you must have a grade that allows you to access the market. There are different ratings. Some are called sub-investment grade. Some are called investment grade ratings. The investment grade rating starts from BBB for both for the major rating agencies in the country and even the international firms as well. So what we are saying is, for a company to access the capital market, you must have a BBB investment grade rating, at least a BBB investment grade rating. Now, if it's below that, we'll have to get some form of a credit enhancement that would increase your rating to BBB or B or above before we can access the market. I hope that is clear.
Yes, thank you. I think that also speaks to the comments made by Mrs. Gaba. There's a difference between credit rating and back rating, just a comment. So I'll go ahead and unmute Mr. Ogu now.
Okay, I think. Okay, good afternoon, everyone.
Good afternoon.
I appreciate the class thus far. Thank you, Mr. Bonaventure, for that clarification. My question again was to seek clarification on what you said earlier, explaining to me why the deliberations should be taking forever or taking time, because I have been following up with this discussion too, and understand that it has been for a while, long while ago. And but my worry is that if the deliberation is taking this long, where the CBN includes the NGO MFIs to provide microcredit businesses to the bottom pyramid customers. So my worry would be that they made that provision for the NGOs to operate, and the deliberation is taking forever. I don't know if you have anything to say towards that. Okay, thank you, Mr. Ogu. There's something you need to understand. The fact is that the Central Bank of Nigeria is my regulator. And once they say they make the rules, I just have to follow. So the only thing I can do is to engage and discuss. We've had this, if you've been following this, like you said, we've had the engagement, and it's not been fruitful. I will tell you that. It's not been very fruitful, because for whatever reasons known to the regulator. But we still believe that we'll be able to get that out of the way and progress. And that's another reason why we also looked at a situation where we came up with a product that we felt could help the commercial bank understand the risk that MFBs bring, and then would be willing to then bring these MFBs or MFIs that are not regulated to DBN for on-lending. And part of what we are doing to encourage them, or basically incentivize the commercial banks, is that we've also put together a technical assistance program. we've started with pilot 5 commercial banks. These commercial banks, 2 of them are SIBs, and the remaining 3 are tier 2 banks. Okay, so part of what we are doing is like capacity building, let them understand and see if they can downscale their own operations to the lower, maybe even to the MSMEs and the MFIs. So we believe that when we do that, that opportunity will be there while we are still engaging the regulator for them to understand why we think they should allow us do more of financial NGOs and the rest. Okay. Another thing we've done, because we were talking about rating earlier from Mr. Latidoye, right? And part of what we did was we recognize the fact that many MFBs also don't have ratings. So part of our credit policy is that there must be a rating from anybody we are giving monies to. So if you don't have rating, what then do? We didn't just throw them away. We've developed our own internal rating model, which was even validated by one of the top-notch rating firms in the world. So I think our internal rating model can even stand the test of anybody. We can even deploy it. So that's why I said when we look at some of the MFBs that have failed our process, it's also part of, if we explain to you why you failed, you'll be able to then correct those things and then even invite a Fitch or a GCR to come and do your rating. And once you've corrected those things, I can assure you, you're going to have a better rating than an investment grade rating. Because the ones we put together is very strict and also follows through what any other rating agency would do. I know, Mr. Ogo, I don't know if I've addressed your concern, but the truth of it is that I have to listen to my regulator, okay? The only thing I can do, like I said, is to continue to engage. I cannot go outside of what they have told me to do. Thank you.
Thank you very much, Mr. Bonaventure. So we will take the final word from our moderator, Mr. Adegoke Adegbami, and then we'll take the closing remark from my MD CEO, Taiwo Joda.
Thank you very much, Fisayo. Thank you to all the participants. It's been a very, very good session, and we have learned a lot. And I want to believe that we still have reasons to do this kind of thing over and over, because it's not what we can finish one day. Having said that, with your permission and with the permission of the CEO of Accion, I also need to recognize some of leaders in the industry that I can see here. Maybe there could be others that I didn't notice, but at least I noticed the state chairman of the National Association of Microfinance Banks, which is Mrs. Mojisola Gaba. She asked the question earlier. So thank you, Madam. Thank you for being part of this program. And then we have the former chairman also, Mr. Omalolu Fatombi. I can also see him. Thank you for coming. But Mr. Taiwo said, I must greet you people. So that's why I'm doing that. And we also see our own mother, Mrs. Bumi Lawson is not only a mother to the Accion family, even for me that I'm not inside the Accion family is a mother to me. And I once worked briefly in Accion under her tutelage. So Mrs. Bumi Lawson, thank you for being part of this program. We recognize your presence. And then if there is any other person I should recognize here, I didn't take notes, I'm very sorry. So let me also greet our the 2 resource persons that we have. We are very, very grateful. It's been a very, very amazing job you have done. And I believe our industry will not remain the same. I want to say that both FBN Quest and DBN expect to hear from us more, because our members will approach you. And I want to plead with you, please listen to us in our own language help us interpret it in the language that will bring results. So that will be my plea to us. Thank you very much. Thank you. So, Mr. Taiwo.
Thank you so much. Yes, great. Thank you so much, Mr. Adegbami Elijah. I also want to say a big thank you to the President Emeritus, Dr. Valentine Wesu, for joining online. Thank you so much. Mr. Fatunde, thank you so much for joining. Those are people that always join to listen. They have so much passion. Of course, my mentor, and the person who handed the baton over to me, Bumi, always been there. Thank you. Quite a number of them that I've seen. Juana, thank you for joining. That's my very colleague. To Mr. Olatidoye, I will kindly request that you leave your contact in the chat box. There are quite a number of people that want to reach out to you. So please leave your contact in the chat box, just the way that Development Bank of Nigeria has done. Mr. Bonaventure Kaimo, you're still our employer. Thank you so much. We're working for you. You send your money on errand, we just run with it. It will be really nice, without my last comment, if we can come together and reason, and the association will be so glad if we can look at ways we can work together to de-risk the industry, and we have a lot more people come to enjoy the kind of funding and good work, excellent work that you're doing. The innovation that you're adapting the National Collateral Registry as a security for loan to Microfinance Bank is very commendable. Thank you. And we look more from that failure rate of 61% to go down to less than 5% as we join hands together to build a very competent industry, microfinance industry, and to de-risk our sector. So all those who joined us again for the 8th time, we say an amazing thank you. If you still have questions, please send us an email and we'll send them to the subject matter experts to give an answer to. From me, it's have another great week. And I want to say that from the Accion team, we appreciate you. We are not building individuals, we're building great institutions. God bless you. Have a beautiful day.
Mo bá ṣí àkáǹtì pẹ̀lú Accion wá máa máa rọrùn fún mi.
Ina son iya karɓar kuɗin Accion Bank na yi amfani kai ƙara kasuwa ta.
Chai, Accion Bank ń fara ní ATM card.
No need to stress, I no need the stress with Accion Micro.